of the price action on USD CAD. Stick with me till the end. I'll be explaining a lot of things one by one, step by step. So stick till the end. And this video will be on the longer side. So have patience. Take out some time. So what we'll be talking about in this we'll focus on, our agenda will be for this video is the smart money traps, the timing of the price moves with the time. There is time based manipulation, time based movements in the market. Anything is not random. Whatever you see on the charts, it's not random, it's purely time based. POIs, inducement, most important, and the execution. I'll talk briefly about the execution, but we'll talk more about timing, smart money traps, POIs, and inducements. All right. So on USD CAD on daily time frame, talking about the recent price action, where we should start with was this bullish push. So after this whole consolidation area, price moved higher, and we had this impulsive move breakout. And what we expect after such impulsive move is a complex pullback, right? There will be less of a impulsive pullback. So talking about marking the order block here, which might interest us in this whole leg, will be this one. So after a push, we expect a complex pullback to mitigate and push higher then, right? Because this complex pullback will create sell side liquidity to be grabbed while going higher. So here what we see is we got mitigated twice here. Why that happened here? Let's talk about it. Because most of the people, what they do is they buy the order block and they wait for the break of structure, but price again came down, stopped them out at break even most probably, and then again goes higher. So why this happened is, if I zoom in, if you see here, after this price gave us a pullback, and let me do it in a different way. So yeah, after this high was formed, price seeks inducement, right? But here on this leg, you see we don't have any inducement. This is purely a single leg. Either price has to induce this low to go higher, or it will create some liquidity to grab it, then come down and then move higher. That's what happened here actually. There are always two scenarios. Either the leg will have the inducement inside it, if not, it will create the inducement, grab it as a fuel to initiate the move in the direction. So that's what happened here. If you see, price collectively came down here, mitigated it, and after the mitigation we expect price to go higher and break the structure again. But here happened something different, because as this was the single leg, price needed some liquidity. So with this corrective structure, it created this liquidity here, this high, this high, this high, and we will expect price to take either of the highs as liquidity and then give us some inducements and mitigations. So here, if you see, this was the last high before this mitigation. So consider this previous high, this is a whole single leg, consider this high as your inducement here. So price induces here and induces some part of this as well, and then again came down to mitigate this and induce this low, because to go higher it needs sell side liquidity as well. So it took the sell side and then initiated the move. So this was the whole scenario on daily time frame. Push, corrective structure, build up of liquidity, grab that, came down again, grab this whole liquidity it was creating here and goes higher, right? Where are the smart money traps here? If you see, the breakout traders, the trendline traders see this as a breakout, and they might on this retest will try to buy and will get induced with this move. Another one, this one, trendline breakout retest, they'll try to sell. Price gave them this move here, but price reversed on them and stop loss hit wherever they had their stop losses, right? So we saw the smart money traps here briefly. Going on to the 4-hour time frame now, we'll talk about this area again. If you see, Price gave us this change in structure, again break of structure after inducing these highs, mitigation, break, again goes higher, mitigates, came down, again break. It should have gone higher, but as we have seen, this was the main high which took the inducement. So this high has to be broken in order to price, in order for the price to continue higher. But what happened? Price just induced this high and wicked on, swept this high liquidity, and then came down, mitigates again, sweeps all these lows, and then initiates the push. So the whole scenario is made what price wants to do. Now if you want to enter the price, enter into the market, capitalize on it in this area, how will we do that? Let's talk about that as well. So for that, the best time frame to do is intraday time frame, which is 15 minutes. Let's jump in there. So here you see, before price coming down and mitigating again and inducing the old low, let us mark that as well for the reference. So let's see what happened here. Coming close to here, then pushing higher. This aggressive push was just for the FOMO buyers, because just before the mitigation, if they consider like, yeah, price will come again and mitigate and then push higher, price just missed the mitigation and pushed higher with this aggressive momentum. This will initiate them their FOMO and enter into the trade in advance, maybe somewhere here, and they will look for buying opportunities, putting their stop losses under and break off either this structure or maybe on the higher levels. But what ended up happening, they will get some move, but with this impulsive move they'll get stopped out eventually. So another trap here. But what we will be waiting for, the mitigation and the sweep of that old low, which happened with this wick, and grab of all these liquidities. After that, what has happened, we saw this last structure which got broken here. So we have a change in structure, right? And after the change in structure, what we expect, price to take the inducement from the sell side and continue higher. Where is the inducement? The last pullback, which is this one. Inducement taken, and as I've explained this many times, after inducement is taken, it is not necessary for the price to mitigate a order block. The inducement is efficient enough alone to push price higher. That's what happened here. Inducement taken, we got this internal shift, mitigation, and continuation, right? So this could have been one of the trades from this level. And talking about the structure, then what happened? Again, break in structure happens here. Price goes higher, builds up some liquidity, which can be used as inducement again to push price higher. Exactly same thing happened here. Again, break of structure, price continues higher, never induced anything, keep going higher, and finally, if you see here, this high was formed, and before that we had all this liquidity lying here, trend line liquidity you can call it, sorry. So price took it, came down, maybe mitigated somewhere, something here on the lower time frame, and again continues higher to break this structure, right? Simple price action, nothing too complicated. Now again, what happened after that? Price comes down, takes this low, which was our main low here in the last structure, which took the inducement. This low took this all inducement. So this was our structure low, structure high. This structure low got broken here. But whenever on the lower time frame these things happens, I'll consider you to go on the higher time frame in this area and see, is this the sweep of liquidity on higher time frame or it is a closure below it, because it might confuse a lot of people. So I'll mark this area, I'll see this on little bit on the higher time frame. What is it? So if you see, this is the area. So you see, this is not a closure, this is just a sweep. So that's why looking at the higher time frame, time by time, is important here. So this price just came in just to induce these lows, and maybe and yes, and it should have mitigated this candle. It has not, but yeah, the whole point of coming down was to induce this low and to come into this FVG little deeper. It might have mitigated this order flow on the lower time frames somewhere for sure, because I don't see anything else get mitigated or induced. Inducement was this low and mitigation was somewhere here. Going on to the 15 again. Right. Okay, so again, as we have seen, this was nothing but just a sweep. So we'll not consider this as our change in structure again. And after inducing this low, getting the fuel, it goes again higher, did the internal shift again, and breaks the structure eventually after mitigating in this area. So let's mark it. We got mitigation here. Internal shift was this. We'll not mark the internal shifts, only the intraday 15-minute. Again, this thing will continue again and again. So after 19th of July until this top, I want you guys to mark and find out the structure as your homework and post it in the chat in the Telegram channel. So this will continue high. Break of structure, correct complex pullbacks. If you see here as well, break of structure, price continues, nothing gets induced. Another push, single leg push. This is the inducement. Price came down to induce it before going higher again and break the structure. This thing will repeat again and again. You don't have to get into the FOMO that you'll miss any trade or something. Price will give you everything you need. You just have to be right at your structures. Structures is important, because what the retail traders will do, they will see this break of structure here, come here, resistance turns support, they will try to buy. What price will do, they will give their reaction to them, consolidate, and instant down. They will be in drawdown here, stop losses under this low, stop losses taken, and then prices go higher. So that's all price do every time. So you have to wait for the inducement. All right, so I have done till here, which is 22nd of July. You have to do after that. Now I'll talk about the very recent price action on USD CAD after price made this particular high. I'll talk about it now. So going back on 4-hour time frame, what happened after this mitigation? Price goes higher, breaks this structure. Let's mark it on 4-hour. We got this break on daily. On daily we saw this break, and what we have from the past was liquidity was taken of this high. Right, so the external liquidity of this high and this high was taken, and when that happens, we can expect price to give us a pullback. And that what happened. Going back on 15 and see where were the opportunities, where were the traps, and everything. So in this whole price section in front of you, we saw this move taking the external liquidity, and what happened before that? Price created all this buy side liquidity here as well to be grabbed, right? And this was the structure low here. All this was the internal structures. We can consider this as a chalk after the sweep, but we need to see a clear structure break here, right? So if you see, so after the sweep, as I said, we can consider this as a chalk initially, but we need to see the break of this structure. So I'll mark it. If I want to go bearish after that sweep of external liquidity on higher time frame, I need this demand to fail, right? And what price did was breaks down. This was the last structure which got failed in eventually. So let's mark it change in structure for an instance that we can turn bearish. We haven't yet, but we can. So price comes down, mitigates this external extreme demand on the last structure. Then what happens is, if price wanted to go higher after this mitigation, it should have given us something more aggressive, because you might have seen whenever price, like this is the structure, whenever price gives us some pullback and comes to the POI or the demand, we see an aggressive push higher, not a slow pullback or slow continuation, right? That's what happens. But here, if you see, price was just too corrective here, building up this liquidity here. So this was a sign that price might not be interested in going higher. So what did price do? Price just goes higher, takes out this internal structures liquidity and mitigates this supply here, and then pushes down and gave us the confirmation of this break of structure. So now officially we are in sells, we are in bearish market. So one, this could have been one of your execution in the market, but for that you have to be sure about what price needs to do. There were two signs of price going bearish. One, the external liquidity being taken. Second, after mitigation, a slow price action. These two were enough for the price to take it down and break the structure. Continuing to see this price action, what happened here? So after this break, price again gives us some structure. This is just internal structure, nothing major. Price has not taken any inducement or something, it's just continuation price action, nothing major to talk about. But can you trade it? Of course, on lower time frames you can. Now I'll bring the session indicator as well and talk about that. So if you can see, this mitigation here happened during the Asian session. Then we saw some push throughout the London Open, Frankfurt Open, and this mitigation. And let me go on the lower time frame and show you something. If price has to offer it, how it will, right? So see this. So this is my previous markings here on the lower time frames. So see this, price goes higher in the London session with London Open here, this blue box you see, price goes higher, mitigates this supply, because most of the SMC traders will try to sell here, of course, right? They will consider all this as the inducement, mitigation and sell off. Price will give them their reaction, which it did. Price goes higher, mitigates it, takes out these highs, came down, they will consider this breakout structure, they will try to sell here, another reaction, and take out this SL here and as well here. But how will we consider it? How will we know that price will do it or not? We have not seen any structure shifts here. You have to know your structures. This was not any structural low, this was the inside move only. If price has to go bearish from this area, I would have considered this break of structure or something more relevant in this leg to be considered as break of structure. So what happened after that? Price induces this high, induces these previous highs, got the fuel, mitigate this supply, which we talked about on the 15-minute, gave us some reactions. Now see, I haven't considered this as my break of structure at all. I want this area to fail. And same thing as on 15-minute happened here as well. Price mitigates it, tries to go higher, breaking this structure, but this was so corrective. And what happens after that? Price gives us this aggressive push down. This tells us price is not interested in going higher. Again, what happens? Corrective structure coming in, building in the liquidity down there, mitigation of this supply. Let me clear it. Mitigation of this supply, and continue here with the New York Open. This purple box is the New York session. So with this New York window, we got the mitigation and push down. So we saw the traps, the timing, the POIs, the inducements, right? Time based manipulations. Going back on 15 minute and see what next. Price, where we were, we talked about that only. So price came down again and we saw the structure break. Price continues. If I'm missing something, I want you to go on the charts and search about it, do the markings, send me the charts on Telegram. I'll see what's wrong, what's not, right? So again, what happened here? When price made this low, we had these equal highs here as the inducement. Previously price has not taken any high, any inducement. If you see in this last leg, this was the leg. If price would have taken this high, then we could have considered that structure. But here price took this inducement, goes higher, didn't mitigate anything, came down, failed to make a new low. That means price will again go higher to take the buy side fuel to continue low. We are bearish, right? So we want the buy side liquidity to continue low. Price goes higher collectively, building liquidity, showing us, yeah, it will come down again, taking the external liquidity of this structure, then coming down and taking out the structure, breaking the structure again. I hope so. Yes, it is breaking the structure. Breaking the structure again. And if I mark this as our inducement, this as our liquidity being grabbed, right? Now after this structure being broken here, what we expect? Price to take another inducement to again continue lower. What happens here? Price goes higher, takes this inducement, Asian high as well. So we can consider these highs as our inducement. Price goes higher, and maybe on 5 minute we'll see later, this got mitigated. Price again comes down. Now again what happens? Price fails to make a new low, right? So what will it do? It will take the opposing side liquidity. Where is it? We have two liquidities here, one this high, one this high. What price does? Complex pullback. Next day starts Asian session, tries to go down, sweeps all these two liquidities here, but was not able to break this. Another sign, price needs some buy side liquidity to go down. It goes higher with the New York session, takes out some liquidity. Next day starts Asian session. We have taken the liquidity from the buy side. Now we can expect a sell side move. What happens then? After the Asian session, we saw this change in structure here. Let me mark it for you. Change in structure. This was the overall order flow, got mitigated, and we saw the reaction breaking the structure again, right? And again you see this again and again, it will happen. Manipulation, mitigation will happen with the timing, as I said in the starting of the video. Here you see this inducement happened with the London session, this inducement happened with the New York session, then this mitigation happens with the New York session here, the purple box you see, and continuation. So everything will happen with the timing. Nothing is random. You can be on the market at a particular time and capitalize on it. You don't have to sit on the market every day and for hours. So again, continue. What happens? Price came down. Where is the inducement here? If we can consider any, I don't see anything major, but this was the pullback. Let's see on 1 hour for just confirmation. Okay, so in this leg there was no inducement, and inducement was this high, but price didn't go that high. Price just gave this pullback and made this low, and after this low was made, this was the inducement we had. Let's go on 15 again and mark. So this Asian high will be our inducement in this case. So price takes the inducement here. Sorry, this was not the inducement, this was the inducement. This high was the inducement after the low was formed. So price took it, New York Asian session, tries to go down, mitigate something here, pushes higher with the New York session to the extreme, because if you see the last structure we have, structural point was this high and this low. So any price action between this high and this low is just the corrective structure or the pullback. So we are having it here before the continuation. So inducement taken, price goes lower, mitigates it, pushes higher, came down. We didn't see any major structure shifts here, but you can see if we talk about the POIs now in this price action, we can consider this as one of our POIs, and then there will be an extreme POI above all these highs in this wick, right? We can consider anything above this and below this another POI, because this is just a wick here. So above this, these highs, and these high below these highs, another POI here. So what price does is, with the New York, we saw this push down, kind of a breakout here, but not that significant. What happens next? Price goes higher impulsively again, takes out this external liquidity from this high. Next day starts Asian session. With the Asian session, we are seeing some shifts in price after this inducement. Remember, on higher time frame as well, we had the inducement of the highs, and then we saw some shift in structure. So same thing happens here. We had this was a recent demand here, which got mitigated and broken as well. So this was our change in structure. And then after change in structure, we need inducement for the price to move down. This was our inducement, right? And after inducement, we got some reaction. After inducing the Asian high, more liquidity was taken here, but this high was kept safe. Reaction with the New York, either if you can read the price action correctly, you can enter here on the 1 minute time frames, or after this pullback towards this breaker block, this one, you can enter here as well, keeping your stop loss safe above here or somewhere here. And you can see the reaction again, which we got last week on Friday. We saw another break of structure on 15. So that was the price action on USD CAD. It is a long video, but yeah, you might gain some knowledge from this. And quickly talking about what might happen next, price can make some more structure here, then induce it and go down from this area if it wants to go bearish again. So this is what can happen next again. All right, so yeah, watch the video again and again, try to understand what I'm trying to say. Go on the charts and see if you can see the same thing what I can see. So thank you for staying till the end if you are, and have a good one.